Good morning, everybody. Hey, welcome to this Thursday, the 13th of June. Hope your week's going well. Hope you're staying dry as we continue to have a bunch of rain here in Central Florida. We desperately needed it, so thankful for the rain. Not complaining one bit at all, but just trying to stay dry. Hey, with that, yesterday, not a bad day on Wall Street. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's remember that there are so many things in this world that, you know what, you and I, we have no control over. What happens in Israel, what happens in Washington, D.C., there's a lot of things out there we have no control over. It's nice to know that you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have in that portfolio based on your current circumstances and how close you are to retirement. Give me a call at 863-382-0037 to schedule your core retirement analysis. And with that, we've got Dave coming up next.
Whose dreams might actually be coming true this morning. We're going to find out and see what the odds are of that actually happening as we get ready to check in on your finances and see what's going on this morning on Wall Street. Yesterday, we had the Federal Reserve decide to hold steady on interest rates, and Mr. Paulson's neighborhood said, well, we'll be prepared to react quickly if it looks like we got inflation under control. We might have an indication that we do for the moment. Let's head downtown town. Statler Financial Services' very own Phillip Statler on the phone. Good morning, sir. Did I give you enough time to get that piece of electronics up and running?
Yeah, I think so. I've got the tablet going, and we are out of internet here at the office. So I'm scurrying around because there's a lot of good stuff I found online today in my tip sheets, and I want to talk about it, Dave, because there's some interesting stuff coming down the road. You're going to like this.
I love it, because let's bring them up to date as far as what happened yesterday. First of all, the Dow was off by just a tinch, by 0.07% yesterday, but the Standard & Poor's had a party. It set a new record, up $21.50. NASDAQ, a new record, up $176. All of that following up on Jay Paulson, the Federal Reserve, saying, no, we're not going to raise interest rates. We're probably going to do them once during the year. The dot plot made it pretty evident that they're only planning on one. But then in the press conference, Paulson said, we're going to be prepared to act quickly if it looks like we've got inflation under control. And we follow that up with a producer price index report this morning, the wholesale inflation report. They were expecting 0.1% increase in prices for producer price and in May. And what do we get? 0.2% decrease. You and I were talking. That would sound to me like put together with Paulson's press conference yesterday that the futures would be reacting with orgasmic fits of glee. Am I coming anywhere close to guessing right?
Dave, they were, I will tell you, but they've stopped a little short. I mean, actually, the Dow right now is back negative.
Huh?
Yeah, the Dow is negative right now.
That's right. Weed is legal. That's right. Weed is legal in New York. I keep forgetting that.
So everything did jump up significantly when that news came out. However, it has dwindled back down. I mean, the Dow's the only thing red right now, but everything is off of those extreme highs that they reached right after the announcement was made.
Yeah, just putting two and two together, somebody's bull crud detector went off. What do you think?
I'm thinking so, because I'm going to give you another bull crud detector here.
Go to it.
Jobs. Go ahead and tell them the jobs number, Dave. So we got that.
Okay.
I want to add on to that.
Okay, first-time jobless claim reports come out every Thursday morning. It's been inordinately low. Last week it was, 229,000. They were expecting it to decrease to 223,000 first-time jobless claims. We ended up getting a report out of the government this morning, 242,000 first-time jobless claims, which pretty much is kind of the standard. They expect around 250,000 to be the indication of a 4% unemployment, fully functioning economy. What did you find underneath that report that was interesting?
Well, it's not so much underneath that report, Dave. It's the overall Friday reports that we get on jobs every month. I hit this headline. And it just, I couldn't help but dig further. Powell admits that the Biden administration is overstating jobs.
Ooh.
Yeah. So you
Well,
dig down.
you and I have been saying for a long time out of the monthly jobless reports, half of them are part-time jobs, which is bogus.
Exactly. And they have not been really accounting for that properly. It says we get an actual number of employed workers for that report that just came out actually plunged by 408,000 employees.
Crap.
Exactly.
I mean,
Because they're not measuring the people that lost full-time jobs and now only have part-time jobs, or they're working 2, 3, 4 part-time jobs. They're not taking that into consideration in that jobs number. The other thing I saw, Dave, that really floored me is there's this little thing that they can do that basically is totally subjective. It's the birth death adjustment. And that is the birth death adjustment is new businesses started and businesses that have died. And that number is totally subjective. And they say that based on that last number, that it was they hypothetically threw in like 1.9 million statistical payrolls over this past year. The
you know that
numbers are so bogus. It's not even funny.
you and I have been saying for a long time when we get these, especially the really pleasantly surprising job count reports every month, that doggone it all, we know for a fact that a high percentage of them are part-time jobs being created. I think the standard really ought to be full-time equivalencies in terms of the jobs created. I mean, if you create 200,000 20-hour-a-week jobs, that's 100,000 full-time equivalent jobs, and you give us a much better reading, wouldn't it?
Yep, it would. So over the past year, they say that the U.S. lost 1.2 million full-time jobs that were replaced with 1.5 million part-time jobs.
Oh my! Now I can buy
Yeah,
mom that operation, huh?
yeah, I'm telling you. I dug
Because
into this, and it's like, oh my goodness.
that I think might be the first time the Federal Reserve has ever had somebody in a position of authority saying, these numbers are really bull crap. I haven't
Exactly.
seen it
They're
come out of.
all political.
Yeah, it's
Political.
normally the right wing. It's normally the right wing talking heads, that say bull crud, and politically, if it comes out of the wings, left or right, I always filter it through a bull crud detector before I say anything about it. But so I've always taken it with a little grain of salt when it comes from the wings. But this coming out of somebody that presumably is dead center and independent of politics, like the Fed, that kind of makes you sit up and take notice, doesn't it?
It does. Hey, I saw something else you're going to like.
Yeah.
I got all kinds of good news for you today, Dave. Hey, oil prices could drop to $60 a barrel in 2025.
Thank you, Santa Claus. How'd that happen?
They just say there's a substantial surplus of if OPEC plus, even if they don't do what they have announced they're going to do, that by the end of this year, that they're going to see 900,000 barrels per day of surplus being created. And
Woohoo.
that if OPEC plus does what they say they're going to do in 2025, they expect that number to actually grow to 1.4 million barrels per day of surplus. And they're crediting the adoption of the electronic vehicle and the energy savings that we are all trying to do to our homes.
Yeah, I mean, you and I talk about electric vehicles not being as big a thing as as politicians want them to be. But the fact of the matter is, there is a percentage of them that are being used, and they're legitimately hot over in China, where they're a substantial energy user over there. So it's got to have a measurable impact on oil consumption, whether or not you and I decide to buy one.
Exactly, you're right. It's going to affect it, and I mean, for us that keep driving, non-electric vehicles, that's good news.
Understood. And you got to keep in mind there's another factor in the oil market as well that's in there. There's a bunch of countries that we don't like and don't admit that we buy from. and some cases actually don't, like, Russia and Iran. And they're selling their oil. They're selling it on the open market, and because there isn't as much demand for their oil, because half the world isn't on speaking terms with Russia, they're selling it at a discounted price to people who will buy it from them, like North Korea and China, and that's depressing the price of oil as well. I thought that, honestly, was where you were going to go with that instead of electric vehicles.
Oh, me. Crazy.
The world is an interesting place economically lately, isn't it?
It is. It is. It's just crazy.
So anyway, put this whole mess together, and we've got a Federal Reserve that says, yeah, it looks like we're getting inflation somewhat under control, and then you add in the fact that, the unemployment rate is probably bogus in terms of its how good it really looks, but still, we threw a normal number of people onto the unemployment rolls last week. I am kind of thinking that this is starting to look like the slowing down economy and the slowing down inflation we were looking for. I'm still suspicious looking at the money supply following that. I'm still expecting to see it still give us some difficulties in controlling inflation in the out months. But so for the short term, the data points sure look hopeful, don't they?
Yeah, they do. It looks to me like at this point, you and I can say at least in this short period of time, they're batting 1,000, right?
So far, at least the last week. If we didn't count all the junk we got a month earlier, we could probably say, oh, goody, couldn't we?
Yeah, exactly. But I'm thinking the market is reading through some of it.
Yeah, and I do have a memory that lasts more than 2 weeks, which is unlike a lot of politicians and stock traders. So it may... Talking about those stock traders, we're kind of at the butt end of the reporting season as far as quarterly reports are concerned. I know that GameStop is due to put their quarterly report out. I don't think it's out today, but I know some things are. What do we got this morning anyway?
So I got Broadcom has reported, and so they actually beat expectations. They came in at $10.96 a share versus $10.84 expected. They beat by about, not quite a $500 million in revenue as well. So that was good news. They also announced a 10-for-1 stock split, kind of following behind NVIDIA. And so they were trading up 14% earlier this morning. My internet's still not working, and I can't really get to the new, well, let's see, maybe I can get to it right here. So it's trading up 2.3% right now this morning, and that stock's a pretty expensive stock. It's $1,495. So it's not a cheap stock at all. The other thing I have for you is Dave and Buster's. Now, Dave and Buster's their sales missed expectations substantially. They only drew revenue of $588 million. They're expected to come in at $621 million, and so that was a huge miss for them. It says they were down 10% earlier this morning. Let me see. I don't know if I can bring it up real quick or not. Dave and Buster's. There we go. It is actually switched up. It's up 4.1% now. So
I'll take it.
Yeah.
Take it happily. Reset it. You had one more?
I did have one more. I have Oxford Industries, which that name doesn't mean anything to anybody, but they are the parent company that makes Tommy Bahama clothes.
Ah, okay.
And so I found this interesting. They missed on earnings by about 2 cents a share, and they missed on revenue by several $100 million. And so that was not good news. They had been down 4% earlier this morning. Let's see if I can pull it up very fast here. Oxford Industries is trading down about 1% right now.
All righty. Resetting the table, blue chips off by a little bit. Everything else was up, relatively speaking, through the roof yesterday afternoon. 45 minutes before we opened. What are you reading this morning, Phillip?
Again, it's a mixed bag right now. The Dow is still down by down by a little bit more than 0.1%. The S&P 500 is up about 0.3, and the Nasdaq 100 is a big winner right now. It's up about 0.75%. The Russell 2000 is flat at this point. So that's where we are from that standpoint. On the commodities front, we've got silver down 2.75% to $29.46 an ounce. Gold is down 0.7%. And then crude oil, see if I can find the right number here, down 0.5% to $78.14 a barrel.
All righty. Nobody's particularly impressed overseas. The overseas markets, Asian Rim, almost evenly down across the board this morning at their 6 a.m. close. Europe wasn't overly impressed by our reaction to our inflation numbers. They're also down considerably. Some of that is the upset on the European Union Parliament, though. Overall, European stocks down by about 0.5% halfway through their day. Getting a bead on retirement counts for a lot. You can help me get that bead, Phillip. How do I find you to get a plan for my retirement?
Dave, that's why I developed the core retirement design to help folks design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And a look at what happened today and likely to do it tomorrow here, same time on Light. Enjoy, my friend, and I'll see you then, all right?
All right, have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
It's nice when you get everything on your list in one place.
Wasn't trying to give.
Hey, folks, again, I want to thank you for joining us, even though sometimes we have technical difficulties. Glad we were able to put the show together today. Have a great day. Stay dry. I'll talk to you again tomorrow. Bye now.